One of the key planks of any trading approach is using multiple time frames, and that applies not just to the charts but also the indicators. And one of the reasons that it's so important is that it's simply this, that the concept of time carries weight. So whatever your time window, whatever 3 or 4 charts you're looking at, the chart that will carry the most weight is the one that has the slowest time frame, because time adds weight. And the principle is very simple to understand. If you look at it, we've got the accumulation distribution indicator on the charts here. I've got a 3-minute top left, I've got 5-minute top right, bottom left is 15-minute, and down at the bottom right is 30-minute. This is all for the pound-yen pair. And the point is this, that when you look at the 30-minute chart, for example, anything that appears on that chart is going to carry more weight. So if the price that you are trading has come to a pause point, it may well be because on a slower time frame, it is hitting a serious area of resistance or finding some serious support. Because anything that appears on this 30-minute time frame is going to carry much more weight than what appears up here on the 3-minute. So let's just walk through and see what's going on at the moment. This is the, beg your pardon, sorry, that's the 30-minute. Let's just hop up onto the 3-minute. There we go. Just click that on there. So what have we got on the 3-minute? We've got a really nice congestion phase that's built. And the beauty of the indicator, the beauty of the accumulation distribution indicator, is that it gives you a clear visual picture of support and resistance up and down the chart. You really don't need to know anything else. It's intuitive. The thickness of the line tells you loud and clear where the strongest levels are and where those levels are less strong. Clearly you can see we've been in congestion. We've got this very strong ceiling of resistance in here, which has been tested multiple times. I've got the little tags off that tell us how many times, but I've got it on some of the others there, as you probably saw. And then down at the bottom here, exactly the same. We've got a platform of support, what was a platform of support, really helping to keep that pair propped up in that particular level. It's just starting to break through that particular floor now, and that is obviously now acting as resistance should the market try and retrace against it. And then down here you've got these other levels which are less strong because they're not so thick. If the price comes down and starts testing some of these, then they will thicken up. That is how the indicator works. Every time a level is tested and holds, the indicator then recalculates and it starts to rebuild them and they become thicker. It's such a powerful principle, but so simple and very elegant. So let's move up onto the 5-minute, which will carry a little bit more weight than the 3-minute. Just pop that up full size for you. You can see here I've got the tag switched on this particular chart. So this one's been tested 5 times. This one's one less at 4. A similar sort of setup here. We've got a weak level here above. We've got this very strong resistance, what was resistance here, acting above the ceiling of resistance, holding everything down. And now we're just starting to break through this platform of support, what was support, and starting to move away from that congestion phase. Fantastic way to trade congestion levels because they give you very clear, defined areas to put your stop loss. For example, if you were going to trade this short, where would you put it? Well, pretty much obviously above this level somewhere. You've got this wonderful protection barrier, price protection, resistance levels as well in place in case of any retracement. It's a great way to trade. Trading congestions, you have to be patient, but when they come, the trend will develop from them because that's where trends are born. In terms of where that trade is like to travel to, the next point you look at on the chart is, well, what's the opportunity if I trade this, if I took this particular position and went short, how much have I got, how much is the trade likely to deliver for me before I run into trouble? And if we look at this one, we've got 151.40, we come down here to 151.24, so we've got roughly 16 pips in there. Is that enough for me as a scalping pip trader? Am I comfortable taking that position? This level here is relatively minor, so we would expect it to move through there relatively quickly. But certainly once we get down to this level here at 151.24, you would expect at the very least some sort of congestion to build because it's a very strong potential platform of support coming into play. And that is the way to look at the chart, and that's the power of using an indicator like this. It just gives you not only what's going on now, but in terms of entering position, how much clear water have I got before I'm like to run into trouble from a price-based perspective? Let's hop over onto the 15-minute. There we go. Similar sort of picture. Obviously looks at a bigger slice of the action, what's been going on, overnight and into the London Open. But again, exactly the same principles. I've left the tags on here. You can see all the various levels, very strong here. So this would obviously carry more weight than the 10-minute chart or a 5-minute chart. Very strong level of resistance here. This platform of support, which was acting as support up to around here, has now been breached, breaking through there. And relatively minor levels below, we've got a 2 here and a 3 here. So potentially if this breaks the downside, not a huge amount in terms of the 15-minute that is going to cause that to pause. And then finally we drop down onto the 30-minute here at the bottom right. Just pop that up full size. And again, looking at it, similar sort of picture. We've tested this region here. It's not particularly strong at the moment, but it's certainly been tested multiple times. And we've got this very strong level up here, just above 152. That's a really strong level, really strong area of resistance. So if this market is going to recover and start moving up through here, it's going to take some serious volume. We've got to get through this level here, relatively minor there. Then we get down to some really serious levels here, and here is the big one at the top. So in terms of getting back up to recovering back up to 152, it's going to take some serious volume, and then when we get to this level here, at the very least, we would expect to see some congestion take place. If it's going to break through there, all well and good. And if you wanted to move on, then you'd move down to perhaps the 60-minute chart, maybe the 2-hour, the 4-hour, whatever, and you keep moving down the time frames in that way to look at the chart from the perspective of, well, what's in the way for me as I develop that particular position in the market. So I hope you've enjoyed this particular video, walking you through the accumulation and distribution indicator. It's a terrific indicator. It's very simple in concept in the way it delivers everything for you on the chart visually, and you get this wonderful image of support and resistance, which of course is dynamic as well. The indicator is constantly checking and rechecking all the time, and those levels will thicken up according to a repeat failure at that level in terms of resistance or support, whatever it may be, and the levels will thicken up accordingly and constantly change. So please use it in this way, use it in multiple time frames. It's terrific to use, and I hope you've enjoyed this particular video, found it useful. Lots more to come, so see you soon, and bye for now.